We have Arun Misra now, who's joining us to tell us about how the quarter's gone by. Mr. Misra, good morning and thanks so much for joining in. Let's start off with your view overall when it comes to the pricing environment going in. How have things panned out here, specifically when it comes to zinc, because that's where we've seen an increase there. We've seen a considerable increase in silver as well. How are you assessing the demand in, supply environment?
No, our pricing, if we look at, let's start with silver. The silver prices will remain, and I had predicted about $31, $32 per troy ounce by December, which has already happened. This is primarily driven by more and more industrial demand for silver. With the push for renewable power all over the world, solar panel manufacturing needs a lot of silver component in it. So that will continue, and there is short supply on silver as well. So it will continue, and we will see the prices remaining at $32 per troy ounce kind of range going forward as well. Whereas zinc is concerned, yes, my take was by December it should reach $3,000 a ton. It has reached before that. My calculation was based on it will happen after the US elections are over. So now after US elections, that delta of $100, $200 must get added to it. So we should see by January the prices going forward further by about $3,100 or $3,200 a ton. Hope it happens that.
Right, Mr. Misra, what are the factors that you're attributing to in terms of expansion in operating margins? How much of this is pricing and how much of this is curtailed costs from your end?
So, although while price is not, if you look at this year H1 versus last year H1, the prices are not so much slightly better. $2,800 average price per ton this year compared to $2,500 per ton, about $300 increase. At the same time, we have cut the cost as well on H1 to H1 basis from $1,170 per ton to about $1,090 per ton. So we are working on both our volume as well as our 5% increase in volume, cost reduction. So altogether, yes, both sides it has gained because of that you are seeing a reflection on our margin increase.
Mr. Misra, can you also talk to us about the significant boost in operations when it comes to production of silver? Are you also expecting this momentum to sustain going forward?
No, it should remain around that because it may fluctuate, go down to 31 and then increase. That's okay because there are beyond a point, if the prices keep increasing, then it starts affecting the demand itself, right? All said and done, globally, about 35% of silver goes into personal consumption, jewelry consumption, and in India, about 60% of the silver goes into jewelry consumption. So that sector may give a pushback to price, and so I don't see it is going beyond $32 per troy ounce. It will remain there only. As far as production is concerned, yes, we have done well, and this first half we have produced about 350 tons of silver, which is slightly 10 tons lesser than what we produced last year at the same time. But also we were affected by slightly lower grade in our SK mine, which is the most silver producing mine, and we hope that in the next set of 2 quarters, the grade improves and we will see better production so that we can live up to our guidance that we had given to.
So where do your current capacities lie? What about current utilizations, and if you have plans for them going forward in terms of expansion?
So our capacity is about, from the smelter, is about 1123 thousand tons, so about 1.123 million tons. But it has never been tested. So this year we are planning that we should go close to 1.1 million ton. So let's see. Otherwise, if with the current production level of 524,000 tons in the first half, if we just double that itself, it is about 1048. But we will do better than that. So we will go close to 1.1 million ton. Then we have to do debottlenecking to take it to 1.2 million ton.
Right, Mr. Misra, your investor presentation also mentions a foray into zinc batteries, and a gigafactory has also been spoken about. So can you tell us about the rationale behind this and plans for this going forward?
No, we are ourselves directly not into getting into battery business. We have done the tie-up for getting the zinc battery technology into India as a replacement of lithium battery that everybody is so ecstatic about. We are looking to tie up with battery manufacturers in India and kind of facilitate setting up of a gigafactory for production of zinc batteries for data center applications, for renewable energy storage solutions. So for India, which should be a big market, and we can ensure that in this new application we remain the supplier of zinc.
So also, what we notice is your short-term borrowings has doubled at around 9,400 crores, pardon me, against 4,200 crores back in March. Are we attributing this largely to working capital requirements? What are the other factors here which have led to this increase here?
So there are cash mismatch issues. So we had to give dividend to, and also we have our investment locked up in long-term investments. And we are a AAA rated company. Sometimes it works out better that we take low debt and fund our capex projects. So yes, this cash mismatch issue, net debt will be around today maybe 5,000 or 5,500 crores. Not a big issue for us because we are likely to produce about another 7,000 crores kind of a number. In H1, we have done an EBITDA of 8,100 crores. So H2 EBITDA should be much better than that. So after paying for capex and all that, providing for 7,000 crores is not a big issue for us. We are not
Point
worried
taken,
on.
sir. Right. Sure. So also, given China's stimulus measures, as well as what we are noticing in inventories when it comes to LME warehouses, what can we expect from key metal prices over the course of the next 3 to 6 months?
See, primarily, we are a domestic market player, so we trust India's GDP growth story, and I'm sure that Indian economic growth would be more than 7.5% year on year. If that continues, government of India's push for spending more and more money on infrastructure, the increasing middle class, their uh, ability to buy more and more auto and Indian auto manufacturers exporting to Europe. Given all that, we are a domestic supplier, and we see no reason to slow down, or we see no reason of any lack of demand in India. As far as global is concerned, our market is mostly around India only, which is Nepal, Bangladesh, or Southeast Asia, and we are doing well there, and we see there will be positive growth in that side. But overall, if you see global economy scenario, then China stimulus package, China growing well, China becoming a net importer, China consuming more and more zinc for their own domestic demand. It's a good story for rest of the world, so that the prices will go up. US economy is very important, and if US post-election their push for infrastructure continues and their push for green economy continues, then world over there will be a buoyancy, and we'll find the zinc prices will also go up along with other metal prices like copper, silver, and all that.
So my final question then is about the solid expansion in your operating margins. Do you expect to sustain these levels going forward?
No, so we have done well in our managing our cost, and that is one action was consuming more and more domestic coal. Our domestic coal percentage has gone up to about 47%, which earlier used to be mere 10% or 15%. So that has reduced the cost of power generation. Our renewable power component in the power mix has gone up from 8.5% to 14%. It is likely to become 23% next quarter, then 30% by year end. So all that is adding to net reduction in cost, and that will continue. As far as we are able to control the cost, rest prices remain stable. Our margin will also be stable, or our margin will increase only going forward.
Okay, Mr. Misra, we leave it at that. Thank you so much for joining us and taking us through the quarter gone by, as well as what we can expect going forward. A very strong quarter for Hindustan Zinc, and the stock is currently up around 1%, and perhaps on expected lines as well. This is even as we see weakness when it comes to a lot of your other counters in the broader markets.